On this chart, we're seeing fresh new records right there. I actually mentioned this last week, I believe, when I was talking about market breadth, and you could I pointed this out right here, that market breadth was actually tilted towards puts. In other words, people thought that the market will go down, whereas this indicator is actually the opposite. You have to look at it from a point of view of contrarian. So whenever this indicator is tilted up towards the puts, this is put divided by calls, so if puts are predominating, this indicator will be moving up. That is a contrarian indicator that you should be thinking about buying instead. And indeed, we saw a move above this green boundary line where I'm hovering just a few days ago, really, and I was like, yeah, this is already overextended into the put direction. So, and this was right there where I'm hovering on June 2nd, so last Friday exactly, and I'm like, this might just work out in our favor. And yes, indeed, now we're dropped into the neutral territory, but we're far, far away from being in favor of calls. We were in favor of calls, back here maybe, but during the bull market, being in favor of calls not a big deal, really. In any case, the gist of the matter is we're seeing record highs from S&P 500. Other stock sectors that are hitting records are high yield bonds. High yield bonds have a high degree of correlation to the S&P 500, so it's good that S&P 500 and junk debt are hitting records at the same time. We're also seeing new records from equal weight ETF, so this is pretty much as telling as it gets. So when an equal weight ETF, so in other words, Apple and Amazon are not as nearly as big